Chris Wood, equity strategist with CLSA. Mr. Woods, good morning. Thank you for joining us. Mr. Woods, most asset prices are up about 4 to 6% from the May's low. So what, to your mind, is driving a risk on trade, and do you think gains are here to stay?
Well, what would normally happen seasonally, what normally happens is we tend to rally in the first quarter of the year, then we tend to start a sell-off in May, then we tend to bounce in July, August, and then we normally sell off again in September, October. So I think that's the normal pattern, so that should be one's base case this year too. But my guess is if we rally here for a couple of months, then there's another bout of risk-off coming.
Chris, you have been a long-term bull on India, but now your view is that the India story is getting challenged, and if things don't improve in the near term, the India story could well be getting over.
Now, the reason I've got a big question mark over India right now is for the same reason the stock market has, and that is the dramatic slowdown in the investment cycle in India, which has become clear over the last 12 to 18 months. Which has put a question mark over the Indian growth story. From 2003 to 2010, the Indian macro story was on autopilot due to a very strong investment cycle, particularly in the infrastructure area. That significant slowdown in the investment cycle is raising issues of the fiscal deficit, raising issues of funding the current account deficit, and has caused a significant sell-off in the Indian currency. So bottom line, until we see material evidence that the investment cycle is re-accelerating, there's a question mark on the Indian growth story.
But Chris, your view is that Indian markets, they do run the risk of a permanent derating if the investment cycle fails to recover.
Well, the Indian market has been derated already, but it will continue to derate so long as we have evidence that the investment cycle is not coming back.
Chris, so if I look at your model portfolio, you're extremely bullish on Indian consumer stocks. You like stocks like HDFC as well as IDFC. What makes you so bullish on them, considering your overall view is that of, cautious mode?
Well, the Indian consumer stocks have proven themselves to be relative safe havens in the last 2 years, as it's become clearer and clearer the investment cycle is slowing. So Indian consumer stocks remain relative safe havens. You still have decent income growth. you have some good companies in that space. But from an overall Indian market, Indian economy standpoint, to get excited on India, to believe that India can grow 8, 9, 10%, you need to see evidence that the investment cycle is coming back. And for now, we don't have such evidence. Without the investment cycle coming back, Indian growth is more likely to be in the 5, 6% range.
So, Chris, let me challenge your conviction on banks. Banks are a proxy to any economy's growth. What makes you bullish on private banks, which are still dependent on private sector capex?
No, I've had private sector banks in my long-only portfolio since late 2002 when I began it. So that's just long-term hold. It's not because I believe private sector banks are particularly exciting right now. But personally, I've favored those banks. I'm favoring the more conservative banks who are focused on the consumer space, not on the infrastructure space. So I would view them as relatively low beta. I am hoping that this slowdown in investment cycle, while it will lead to a pickup of NPLs in the infrastructure space, does not undermine the whole consumer lending space.
So, Chris, are you worried about book qualities and NPAs of PSU banks, and is that the reason why you're bearish on the entire sector?
Well, that is a potential, clearly a potential negative, and right now I don't have the public sector banks in my long-only portfolio.
Chris, for someone who's extremely worried about corporate governance, what makes you bullish on real estate stocks? Because Indian real estate companies, they have poor disclosure norms.
Well, no, I've always liked the Indian property story. The issue, because I believe there's a long-term business opportunity. I think the growing Indian middle class want to buy properties. And I think there's a banking system to provide mortgage credit to own those properties. The issue is the corporate governance standards of the individual property names. So the reason I've got Godrej Properties in as my chosen stock in this space is simply because we believe that's a better from a corporate governance stand, and we believe the business model makes sense. And there's a business opportunity in India for whatever property developer who can successfully build a national brand name.
So, Chris, given that, we have a sub 6% print on the GDP growth figure, do you expect the RBI to announce a 50 pips rate cut today?
I think the forecast of CLSA is not for that degree of monetary easing. My view on this is simple. I'm not the economist. My view is extremely simple. However, in my view, the Reserve Bank of India wants to cut interest rates more this year. The question is whether the external environment will allow it. So if the rupee is not collapsing, they will try and cut rates more. But clearly, if the rupee starts going down again, if we head towards 60, then as a practical matter, the RBI won't be able to cut rates. The key point is they want to cut rates. The issue is whether they will be able to.
Chris, closer to 55 or let's say closer to 56, do you think rupee is now nearing end of its decline?
No, I think rupee going to 60 is quite possible. I think investors in India need to prepare for that. The issue is, will the rupee hitting 60 serve as a wake-up call to Delhi to do things to improve the fiscal deficit, etc. And obviously what the market will want to see is more material cuts in energy subsidies.
Chris, what makes you a gold bull and you have a long-term target of 3,500 on this one? Why is that so?
No, I'm still extremely bullish on gold. I think the setback in gold this year and gold mining stocks is an opportunity in both asset classes. I think gold has the potential to correct more if there are people out there who own gold on leverage. But what I've been telling investors is to accumulate more gold bullion if they see the price go below $1,500 per ounce. My long-term minimum price target for gold in this bull market, which began basically 10 years ago, is $3,500 US per ounce.